I'm Karunya Rao, and joining me in conversation today to talk about commodities and more is Peter McGuire from XM Australia. Peter, great to have you on board.
Lovely to see you, Karunya.
So let's talk about, first and foremost, the Goldman Sachs report, wherein they're urging investors to dip into commodities. Now, commodities have seen a very strong up move in the first half of the year, but since I think June, July, they have been fairly volatile. So, do you concur when Goldman Sachs, a brokerage like Goldman, says go out, buy commodities, the fears of recession are overdone? Do you concur with them?
Well, I'm conscious that the market has had a very volatile first 6 months. I'm also conscious that energy prices haven't wound back. They're actually, at the moment, they're moving to the upside. And I wouldn't be surprised to see further moves to the upside. And I think that there's some bargain hunting to have, but I'm worried about, global recession and the theme of the market, where we are with PMIs, GDP, inflation leading up to Christmas. So I do say that they're cheap, but it depends on which commodities and depends on the retail sector, how you're going to use them. Are you buying physical, or you're buying paper in the sense of a derivative, or you're storing it in the sense of food or oil or gold or whatever?
So, that's why you're here for, right? To tell us where should we go bargain hunting, especially retail investors who want to diversify and look at commodities right now, because even the stock markets are looking equally volatile and,
Yes.
seem to be in a seesaw mode of sorts.
Absolutely. I think that whipsawing is what, from the mood that I'm interpreting and the sentiment, I think it's going to be very volatile lead up to Christmas. So that volatility is not going to go away. We understand Jay Powell's comments, Fed chair. We understand central banks globally increments of 50 or 75 basis points to the upside for interest rates. We understand inflation trying to rein it in. We understand the cost of electricity and so on, and droughts in Germany and China, and geopolitical with the Russia/Ukraine situation. So if I was looking at something, you'd have to say, yes, commodities are a good place to be, but how long are you holding it for? And if you're holding it for the longer term, say 5 to 10 years, I think silver and gold are a standout that they've got. And India have been, they're wonderful. It's part of your culture. If you don't want to put it under the bed, you'll wear it.
So, silver and gold, is that it? Is that what you're betting on the most?
Well, I think that there's other upside. I wouldn't be surprised some of those base metals in the short term you could see move to the upside for the likes of copper, and probably zinc's got some more upside, and certainly aluminium. They were fairly heavily sold off. But at the moment, I just want to see the general mood of Wall Street. I want to see how the mood of the global Main Street is. And once you interpret all of that data, then you're looking at opportunities. But yes, if you're buying commodities that you can store and they don't spoil, so you can't do that with food, but you can certainly do it with gold or silver or base metals, then yes, it's wise buying. And you're always prudent in, picking things up that are cheaper than what they will be in the years to come. So, from what I'm seeing, yes, I think there's some good bargain hunting. It just depends on what commodity and how you're going to store it, and whether you're buying physical.
Let's also talk about oil, because that also has a huge, impact on markets overall, gold and oil, of course. Is the pullback in oil providing you an attractive levels? Do you think where it's perched at right now could be a good entry point, or do you see some more pain and some more cooling off there?
Well, I think at the moment it seems to be moving to the upside. We understand the situation with the Saudis last week. We're conscious as far as demand, supply, and also I've got WTI just on $97 a barrel. It's moved up strongly since Sunday night in New York. Brent's sitting at just under $105 a barrel, so it seems to be heading back up. You've got the midterm elections in 2 months' time in the States, or 9 weeks away, approximately 10 weeks. And you've got that seems to be gaining momentum with the cost of electricity, natural gas moving higher, big move to the upside. And they're all looking at how they're going as far as storage and supply leading into the Northern Hemisphere winter, how you're going to heat homes across Europe, certainly, and very much across, other parts of the world.
Yeah. So is natural gas perhaps the place to be, or has it peaked now?
I think there's more upside for nat gas. I really do. I think it's had a very solid move, and there's more potential to the upside because we haven't seen any supply disruptions with hurricanes yet, and we're only at the end of August, so it's not unusual for the rolling hurricanes to start to come in, mid-September, certainly by end of September, October, November. So that could certainly cause some disruption, panic to the market. And the overall theme at the moment is everyone's saying, how do we store gas? Where do we get gas from? How do we ship it in? And what happens to, supply with 60% of of European demand coming from Russia?
If we look at overall, commodities which are used as raw materials, whether it's softer commodities like cotton, paper, etc., or even base metals, how is the trend that you see playing out from here on? There has been some correction in all of the prices from the peak that we saw in the earlier part of the year. Do you think they will continue to ease and, things will pick up from here on from a end user standpoint in terms of costs?
Well, the next couple of months, I think, are going to be very fascinating because there's a lot of stars aligning. There's the interest rate pickup across the world, so central banks becoming engaged and raising of rates. Secondly, with PMIs seem to be under 50, not over 50, so that contraction phase, and that can be a good time to buy. But the other side, of course, is where do we get from a Main Street user high energy costs? And the overall, I think, appetite is got to be, yes, they've bounced, and they've bounced nicely from those June or May, June sort of lows, but they just seem to have had a little bit of a siesta over the last few weeks. There's been no upside or downside. It's just been very range bound. So I haven't seen, something there to stir my heart to say, hey, we're ready to take on board a position, because there's just no movement at the moment. And that's where oil has been and gas have been certainly trending a fair bit higher.
Yeah, in fact, there have been very contradictory and very divergent views coming in as far as oil prices are concerned. A few months back, I think in July, Citibank had given a very, very cautious figure, $65 per barrel by the end of 2022. And on the upside, you had a range of $140 per barrel as well by other brokerages. So,
that's right.
So which way are you leaning towards?
Well, they could both be right. That's the funny thing, because they could both be right within a month. And I'm not suggesting we're going to see a whipsaw like that take place. But at the moment, it seems to be in an upward trend. And I wouldn't be surprised for that to continue over the September and possibly October time frame. How it leads into November and December, that's too far out, because there's so many different components that you've got the Chinese property market hemorrhaging, you've got what's happening with interest rates, recessionary fears, hurt on Main Street, electrical consumption. I just saw something today. It was €45 in France for a megawatt hour of energy or electricity going back about 2 years ago. Now it's 1,065. That's 26 times as far as a percentage move, 2,600% increase. So that's got to wear into the market as well. All of those energy costs, we've got to understand what the cost is going to be the consumer and how much is left in the wallet and the purse to buy other goods, heat your home, or naturally food and the cost of living.
Yeah, that's definitely something to keep in mind. So, just to sum it up, you're bullish on gold, but at the current levels where people do see some more pain because of inflation and recessionary fears as well, it could continue to trade weak. So in India, I mean, we did reach that 51,000 per 10 grams levels just a couple of days back. So is now a good time to buy, or should one buy if there's further, some more easing in the prices?
Well, we've had a very solid move to the upside, so we're going to be conscious of that as far as US dollar. It's been one-way traffic, and it's the king dollar. So whilst all the other markets, they're all the ugly, everything else is, they're ugly markets to be in, all those other currencies, if you can put it nicely. It's the best of a bad bunch. So you've got those markets that aren't doing very well, being euro, yen, pound, Aussie dollar, commodity currencies, Kiwi, Canadian, and then you've got King dollar off to, it's in a hot air balloon. It's just shooting through the sky. So I think that US dollar will continue to have uplift. And once it does see that correction, and you do see it come under pressure to the downside and the other central banks raise their rates, and it's not so much divergence between euro and dollar from a percentage case, then you're going to see possibly gold, I think, have a bit of a run. So, you don't buy this, and that's the theme. We're not buying this today to see where it is tomorrow. It might be a month, it may be a quarter until you actually get some lift off. But at the moment, you have to say it's relatively cheap in the big scheme of things.
Yeah, and in the backdrop of that, do you foresee any major impact EMs?
On the yen?
On EMs, emerging markets.
Emerging markets, yes. Yeah, I do. I see issues there from energy. I see problems as far as what's going on with not only electricity, but certainly inflation. That your domestic market in India, and you're talking about likes of Bangladesh and Pakistan, and then you look at Sri Lanka and the situation there. I'm across what's happening with the Philippines and Vietnam and Malaysia and Indonesia. So big population bases, let alone the situation in China. So we've just mentioned the best part of 4.5 billion people, and it really is the epicenter of the world population. If you take that basin from really where you are and work across to the east, it's just, you're talking the majority of the world's population live in that basin. And yes, I think we've got some problems ahead of us for all of us, and that's got to be worked through. Supply chains are still created. Manufacturing, consumption, what's happening with engineering, what's happening with auto sales, and the cost of even charging an electric vehicle must be to the point prohibitive to some extent.
Yeah. Okay, let's hope, as a collective, we're able to tackle all of these concerns eventually as and when they play out. But for now, clearly, things are looking a tad worrisome. And gold and silver definitely something that Peter says can be looked at for the long haul, despite near-term range-bound levels that it's trading in. Thank you so much, Peter, for joining us and for talking to us about a host of commodities and how the current macros are impacting the sentiment and the prices for the same. Thank you so much.
Thank you, Karunya. Take care.